Yo, what's up, world? We're about to dive deep into Pakistan's energy sector, and trust me, it's a wild ride. We're talking about circular debt, a financial black hole that's sucking the life out of the nation's power players. Imagine a game of musical chairs where everyone is scrambling for cash, but the music never stops. That's circular debt in a nutshell. It's a chain reaction of unpaid bills that's crippling Pakistan's energy sector, from oil giants to power plants. First up, we've got Pakistan State Oil, the OG of Pakistan's energy scene. They're the big dogs, importing and supplying the fuel that keeps the country running. But here's the catch: power companies, those guys responsible for getting electricity to your homes, are notoriously bad at paying their bills. So, PSO is stuck in this financial limbo, hemorrhaging money because they're not getting paid for the fuel they've already delivered. It's like ordering a pizza, eating it all, and then telling the delivery guy you'll pay him next month. Maybe. This financial drain is no joke. It's pushing PSO to the brink, making it harder for them to invest in new infrastructure, maintain existing operations, and even import fuel. It's a domino effect, folks. When PSO struggles, the entire energy supply chain feels the heat. Imagine a world without reliable access to fuel. That's the nightmare Pakistan is edging closer to. Next up, we've got the Oil and Gas Development Company, or OGDCL, the backbone of Pakistan's domestic oil and gas production. These guys are out there drilling, extracting, and supplying the energy that powers the nation. But guess what? They're also caught in the circular debt trap. Power companies, those repeat offenders, owe OGDCL a mountain of cash for the gas they've consumed. It's like borrowing your friend's car, racking up a huge fuel bill, and then forgetting to pay them back. This debt burden is a major buzzkill for OGDCL. It's eating into their profits, limiting their ability to invest in new exploration and production projects, and even jeopardizing their long-term sustainability. Think about it. If you're constantly chasing down payments, how can you focus on finding new energy sources? It's a recipe for disaster. Now, let's talk about SUI Northern Gas Pipelines Limited, or SNGPL, the pipeline kings of Pakistan. They're the ones responsible for transporting natural gas from the production fields to your homes, businesses, and power plants. But hold on, they're also drowning in a sea of debt. Why? Because various sectors, including those pesky power companies, are notorious for delaying their gas bill payments. It's like using a ride-sharing service, hopping out at your destination, and then telling the driver you'll pay them later. Maybe. This financial strain is putting SNGPL in a tight spot. It's affecting their ability to maintain and upgrade their vast pipeline network, invest in new infrastructure, and ensure a reliable gas supply. Imagine a gas pipeline springing a leak because they couldn't afford proper maintenance. That's the kind of risk we're talking about. Let's shift gears to the powerhouses of Pakistan, starting with the Hub Power Company, or HUBCO, one of the largest independent power producers in the country. These guys are generating electricity, keeping the lights on, and powering industries. But guess what? They're also entangled in the circular debt web. The national grid, the entity responsible for buying and distributing electricity, is notorious for delaying payments to power producers like HUBCO. It's like working your tail off, generating electricity for the entire nation, and then getting stiffed on your paycheck. This payment delay is a major blow to HUBCO's financial health. It's impacting their profitability, hindering their ability to invest in new power generation projects, and even threatening their long-term sustainability. It's a vicious cycle, folks. When power producers struggle, the entire energy sector suffers. Next up, we've got another power giant, the Kot Adu Power Company, or KAPCO, a key player in Pakistan's electricity generation landscape. They're churning out megawatts, powering homes and businesses, and keeping the nation energized. But here's the kicker: they're also grappling with the circular debt monster. The national grid, that notorious bill dodger, is delaying payments to KAPCO, leaving them cash-strapped and frustrated. It's like going to the gym, sweating it out, building muscle, and then finding out the gym owner skipped town without paying you for your personal training sessions. This payment delay is throwing a wrench in Capco's financial gears. It's affecting their cash flows, hindering their ability to invest in maintenance and upgrades, and even jeopardizing their ability to purchase fuel for power generation. Imagine a power plant grinding to a halt because they couldn't afford fuel. That's the kind of risk we're talking about. Let's move on to Engro Powergen Kadirpur Limited, or EPQL, another major player in Pakistan's power generation scene. These guys are harnessing the power of natural gas to generate electricity, keeping the lights on and fueling economic activity. But guess what? They're also caught in the circular debt crossfire. Power purchasers, including those repeat offenders, the power companies, are notorious for delaying payments to EPQL, leaving them financially strained and frustrated. It's like creating a masterpiece, pouring your heart and soul into it, and then having the buyer tell you they'll pay you whenever they feel like it. This payment delay is disrupting EPQL's financial rhythm. It's impacting their profitability, limiting their ability to invest in new power generation projects, and even jeopardizing their operational efficiency. Imagine a symphony orchestra unable to perform because they couldn't afford to pay their musicians. That's the kind of disruption we're talking about. Last but not least, we've got K Electric, the sole power supplier for the bustling metropolis of Karachi, Pakistan's economic engine. These guys are responsible for keeping the lights on in one of the world's most populous cities. But guess what? They're also grappling with the circular debt beast. Various sectors, including government entities and private consumers, are notorious for delaying their electricity bill payments. It's like living in a luxurious penthouse, enjoying all the amenities, and then forgetting to pay your rent. This payment delay is creating a major headache for K Electric. It's impacting their cash flows, hindering their ability to invest in infrastructure upgrades, and even jeopardizing their ability to purchase fuel for power generation. Imagine a city plunged into darkness because the power company couldn't afford fuel. That's the kind of risk we're talking about. Pakistan's energy sector is caught in a vicious cycle of debt, a financial black hole that's threatening to swallow the entire industry. From oil giants like PSO and OGDCL to power producers like Hubco and Capco, these companies are struggling to stay afloat as delayed payments cripple their finances and jeopardize their operations. This isn't just about numbers on a balance sheet. It's about the lives of millions of Pakistanis who rely on these companies for their energy needs. Imagine a nation crippled by power outages, economic activity grinding to a halt, and daily life disrupted by a lack of energy. That's the stark reality Pakistan faces if this crisis continues unchecked. We need a systemic overhaul, a comprehensive plan to address the root causes of this debt trap. We're talking about reforming the power sector, improving governance, tackling inefficiencies, and holding those responsible accountable for their unpaid bills. This isn't about bailouts or quick fixes. It's about creating a sustainable energy future for Pakistan, one where companies can thrive, investments can flow, and citizens can enjoy reliable access to energy.